Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs counting you down to the closing bell. Here to help take us beyond the bell. It's our global simulcast with Carol Massar and Tim Stenovec. We welcome our audiences across Bloomberg Television, Radio, and YouTube. Carol Massar, where were you when Jay Powell reminded you again and again that he's not pivoting?
Where was I? I was at my desk, rapidly taking notes, kind of nodding my head, saying, we know this. He keeps saying this. And we saw it play out in the markets. What a whipsaw, right, in terms of market reaction. Got to say, guys, though, I've been watching bank stocks. We just talked with Carol Schleif over at BMO Family Office. They're pretty much at their lows. They're down about 1.8%. And her thinking is that maybe banks are indeed preparing for things to slow down, maybe having to have more reserves, and basically as consumers and businesses start to pull back a little bit.
Okay, well, it's obviously too early to start talking about Jay Powell's memoir and what it will be titled, but I think A Ways to Go, a Ways to Go could be a good title there. No, I mean that in a really endearing way. Over and over again, A Ways to Go is really what sticks with me, and that's what he said about when the tightening cycle and bringing down inflation. They've got a ways to go, and you see it reflected in the equity market today.
A ways to go. I like that.
Thank you.
And the reason, because inflation is steadfastly too hot, it won't budge, and the labour market, now that we push ahead to for Friday in terms of the jobs report, remains very strong. We're reminded with the JOLTS data, we're likely to get the jobless claims tomorrow. And of course, we're likely to see it perhaps in the non-farm payrolls as soon as Friday with 190,000. That's still solid.
And that, in part, makes the case for a higher than expected terminal rate. It was interesting that we were looking at on the terminal some of the 2023 swaps that are looking at a terminal rate at now about 5.1% or so. So a little bit of a lift up here within how we're thinking about not only what is the terminal rate, but then, of course, how long we stay there, too.
Right. Well, that's the key phrase here, because I think the question really shifts from how high will rates get, and more importantly, how long will restrictive policy be in place? I think you're seeing that reflected today here in the reversal in the markets. The Dow Jones Industrial Average down more than 500 points, or roughly about 1.5%. The S&P 500 down about 2.5% here on the day, while the NASDAQ Composite going to finish the day lower by more than 3%. Similar story for the Russell 2000. A lot of those big name stocks, Caroline, moving lower here on the day, including Apple, Microsoft, and Amazon.
And let's talk about the biggest smartphone chip maker, Qualcomm, seeing first quarter revenue forecast well below expectations, 9.2 billion. To 10 billion. The estimate had been for 12.03 billion. The fourth quarter, as it stands, earnings per share coming in relatively in line, 3.13 is where we are on adjusted earnings per share. Revenue coming in 11.4 billion. The market liked those numbers, but the first quarter forecast for a company that has said it can withstand some of these macro headwinds, it's diversified into the auto sector. This is a company that's managed to navigate supply chain issues very well, but it still has exposure to China, and therefore we're still seeing a first quarter revenue number that coming in well below expectations. We're off by 6.7% in after hours market for our radio audience.
This is still a macro story for a Qualcomm, and really for any company out there right now trying to report earnings in this environment. And more importantly, how do you get into 2023 with a forecast when we had the kind of Fed meeting that we had today?
For our radio audience, we were just talking with Jason Brady over at Thornburg, saying that the outlook coming out of this earnings season has been a little cloudy. When you think about the ability of these companies to navigate, to forecast the future, especially when you're thinking about a lot of the volatility that's coming from the Federal Reserve as well. We won't even get into the dollar strength impacts of that as well, but the geopolitical risks and as well sort of that slowing macro environment, Carol, that is on the horizon.
Well, and it's really interesting here, just for the radio folks, you've got Qualcomm down almost 8% in the after hours. And you've got, as a result, you're also seeing the overall semiconductor index, the stocks also down about 3%. So again, more pressure, Tim, on everybody in that space. All
right, we're seeing more earnings come in. I'm talking about Roku right now. Third quarter net revenue coming in above estimates. Third quarter net revenue coming in at $761.4 million, beating estimates of $702.3 million. We're continuing to wait for other numbers to come in. We should note that Roku's down about 75% year to date as the wider streaming industry has struggled in 2022.
When do you start talking about the valuations on some of these companies? You take two companies, very different, Roku and Qualcomm, two different businesses, but also two companies that I think are assessed differently by investors. And how do you sort of shift valuations, if at all, in this environment?
Overall, how do you give a forecast and then have such, what's interesting, an upbeat perspective overall on where you are at. I mean, we have to remind ourselves that Qualcomm is posting, when you're looking at the revenues that it's brought in for its fiscal third quarter, you really are seeing dramatic growth overall in their third quarter results. 45% when you look at segment results of revenues up 45% overall. The fact that Cristiano Amon is still saying, we are pleased to report strong quarterly results, record QCT automotive and IoT revenues in a challenging macroeconomic environment. That's really all they can hang their hat on, is a challenging macroeconomic environment. But they're still saying they're well positioned to company bringing advanced connectivity. This doesn't speak of a company that's just really let down the side in terms of its earnings forecasts.
Interesting. And I mean, just to play off that, I mean, you take a company like Qorvo, which is sort of kind of in the same space, or at least adjacent to a Qualcomm, and they're giving a forecast for their fiscal third quarter that is well below street estimates, 700 to 750 million. The street was looking for 981. So we talk about Qorvo and its link, of course, to the smartphone market. Qualcomm, of course, has a link there as well. And it's interesting to see that the softness that we're seeing in this guidance, maybe that is reflective of softening macro conditions.
I know that we're still waiting for eBay as well. We're waiting for Zillow as well, even MGM Resorts to some extent. When you think about that macro environment, all the analyst notes that we've been reading on, really a majority of these companies are looking at as some of the key headwinds.
The initial reaction to Roku coming out with earnings was that shares moved higher, but we're actually seeing it move lower, significantly down about 18% in after hours right now. The company reporting a third quarter loss per share of 88 cents. Estimates were for a share of $1.22. The company reversing pre-market as 18% drop.
That was quick.
Yeah, that's quite the reversal. You go from 12 up to 19, 20% down. I am curious, too. I mean, we are effectively kind of moving towards the tail end of the earnings season, at least as far as the bigger cap companies go. So if there was any hope that the micro was going to save this market, I feel like that moment's starting to pass really quickly here.
Well, and I think what's interesting, too, and I want to go back to Qualcomm, still down about 7% in the aftermarket, you know, and some of what we hear from their statement specifically. I mean, we talk about chips being in everything. These guys, obviously, biggest maker of smartphone processors. We think about how ubiquitous they are, but they talk about the rapid deterioration, demand, easing of supply constraints across the semi industry have resulted in elevated channel inventory. We know, Caroline, that this is a market that can go from booms to bust pretty quickly, but nonetheless, that talks about a little bit of a negative tone there.
And we've got to remember, of course, the geopolitics that affects this industry group as well. Here is a company, of course, that it does have relationships with China. I think we have some more breaking news when it comes to, well, personal investments as well. Robinhood, of course, a company that is pretty volatile, to say the least.
Yeah, the Robinhood earnings out. I think before we dig into those, can we dig into Zillow real quickly? Because those numbers coming through as well, and they're not good at all. Revenue, $483 million year over year. That's a decline of 72% here. We're going to dig a little bit deeper into those numbers as we get them. But Taylor, I think you have some earnings as well.
Yeah, let's just take a look at eBay as well. When we think about the health of the macroeconomic environment, third quarter net revenue actually comes in better than expected, $2.4 billion versus estimates of 2.3. Third quarter adjusted EPS from continuing operations, $1 versus estimates of 93 cents. They're talking about third quarter gross merchandise volume. Again, 17.7 billion. Estimates had been for 17.26 billion. And they're now issuing some forward guidance as well. That's where things maybe start to look a little bit weaker, $1.03 to $1.09. Estimates had been for $1.07 again on that EPS adjusted numbers on a continuing operations basis. But overall, eBay actually looks to be a little bit of a standout amidst some of the other negative bad news that we've seen.
And I saw we had Etsy cross the wire a little bit while ago too, and those shares are slightly higher. And I mean, it looked like it was a miss on both the top and the bottom line. But I guess when you start to talk about some of the trends that we're seeing out of eBay, is that also going to be reflected in a company like Etsy? And
not just up a little bit, Romaine. We're seeing it bounce around in the after hours, and it's up about 5.6% as we speak. I mean, this is a company, we've got to watch the margins. They've been investing in the platform specifically. There's also some tough comps. So what we've got for fourth quarter gross merchandise sales, they're talking about $3.6 to $4 billion. Going back to fourth quarter revenue, they're looking at $700 to $780 million. So that could be potentially a beat. So maybe that's where we're seeing some enthusiasm. Caroline, the estimate out on the street is $744.6 million. So maybe that's why we're seeing this stock pop up in the after hours.
Let's have a quick check-in on Robinhood, because actually they are delivering pretty solid numbers. Net revenue third quarter, $361 million. That's a slight beat. We're seeing other revenue at $25 million, slightly shy of expectations, but certainly an adjusted EBITDA number where they've delivered profitability, a $47 million number. I'm sure Taylor will push back on whether adjusted should be what we're looking at, but the estimated loss was for 65 million. So that's a big swing if they are, and they're managing not to post a loss here. And transaction-based revenue isn't as high as the street wanted to see, but they are still managing to get 12.2 million monthly active users, a little bit shy of the 13.7 million that the market wanted. Crypto looks relatively steady, 51 million. But overall, this is a business that manages to beat on the net revenue number and sound pretty positive in their earnings. They're saying they achieved the goal of reaching adjusted EBITDA profitability, and overall, they delivered a top feature request as well. So a company that remains focused on serving our customers, apparently, up 2.5% after hours.
Yeah, interesting reads here across the economy. Booking earnings actually coming through now. Booking Holdings, a big travel company. It looks like a beat here with 3Q gross bookings coming in at $32 billion. That's slightly above what the street was looking for, which is roughly about $31 billion. But when you look at sort of room nights sold, 240 million, that's above estimates. When you look at adjusted EBITDA, that's above estimates. Even when you look at adjusted EPS at $53 a share, that's above estimates. Not really seeing any guidance here, but the company does say they are encouraged by bookings for travel into early 2023.
Oh my gosh, I thought we were done with earnings. What's going on?
Well, sorry, Carol. I got another one here. How about this for you, Carol?
See, I told you.
Ticker TWNK. Twinkie. Hostess. Beating results. Net revenue coming in at $346 million. How about that? And they're raising their CapEx spend. I don't know what their CapEx spend is for Twinkies.
R&D,
yeah, it's a lot of R&D that goes into those things.
Hey, Romaine, it's, I think, unchanged in the after hours.
Oh.
Is
that the only one that
isn't? Such a Debbie Downer. I think we have to go. All
right, just real quickly.
She hates Twinkies.
Qualcomm,
why do you hate Twinkies?
Because it's carbs I don't need. Qualcomm's down about 5%. eBay's up about 7%. Etsy's up about 11%. Booking's up 4%. Hood's up 2.5%. We got to talk about it, folks. Go to Bloomberg.com to get all the earnings stories. All right, that is a wrap. No Twinkies. We will see you. That's a wrap on radio, TV, YouTube, and on Bloomberg Quick Take. We'll see you again, same time, same place tomorrow.